Hey YouTube, Shelka04 here. So the other day I produced a video entitled How I Make Money on the Stock Market. And there was enough interest in that I want to follow on with this sequel entitled Mistakes Not to Make in the Stock Market. So grab a piece of paper and a pencil, as I'm going to go quickly, and follow along. First thing you need to do is come up with a plan. What's your investment strategy? Now I encourage you to write that down. Not right now, but write down your investment strategy, because that's something that later on down the road, 6 months from now, a year from now, whenever it is that you think you want to change your plan, I want you to go back and look at that and think, how is what I'm proposing to do different than what I've written down and had success with up to this point? And the reason I suggest doing this first and foremost is because, at least it's been my personal experience and the experience of people who I've talked to about this. What happens is they come up with an idea that works, and then they get a harebrained scheme, and then suddenly that's going to be the new thing. And what happens is, again, in my case, I wound up consolidating my portfolio and dumping it into a stock that I thought was a sure thing, and wound up losing pretty much 90% of my investment. So had I had a plan written down that I could go back and look at and really think about, I might not have done that. Let's talk about the second thing. Tips. I would put to you that there is no such thing as a stock tip. And the reason being that unless you are on the board of directors or the president of the company, you have no idea of really knowing what that company is doing. And I don't care if you're some regional sales rep, or if you've got a brother-in-law who thinks that he knows exactly where the company's going. You don't. So take that idea of a stock tip with a big grain of sand or salt or something, because it's really probably based more on hunch than fact. And if you get emotional, that stock tip is going to turn around and bite you in the ass. Now let's talk about emotion. Emotion's going to hurt you, and emotion's going to hurt your portfolio. And by that I mean, look at your stock portfolio as a mathematical equation. Don't look at it as something that it doesn't owe you a damn thing, all right? And look at it like it's new every day. Because basically, if you think you've got your portfolio really dialed in, and can step back and walk away from it for 6 months or a year and not pay attention to it, what's going to happen is you're going to wind up getting bit in the ass. Because that portfolio is always looking to screw you. And by that I mean, there's no ideal combination of stocks to own. Yeah, you could have a tracking fund, but those are still made up of individual companies. And something will happen that those companies, wind up falling out of favor. So, again, getting back to the emotional aspect, your portfolio doesn't owe you a damn thing, as I said. So don't look at it like, oh, I want to hang in there. I'll cash in, but I want my portfolio first to go up another 5%. There's no guarantees that that's going to happen. So if you're at that point, go back to stage one, where I said write down your plan and look and see what you had written down then. And again, sort of tapping back on the plan idea, have realistic ideas, have realistic strategy. Whether it's you're going to cash out after you've made 20% on top of your investment, or you're going to cash out every 6 months, or you're never going to cash out, or you're going to take the dividends and reinvest those back into the company, or you're going to take the dividends and invest those into another company. In my case, what I've done is, as I said in the other video, I've invested in stock splits. So when my portfolio gets back up to the value that it originally was when I purchased it, versus now that the stock is split, what I will do is sell off half of the shares and then take that money and buy another stock split. So basically I've, in some respects, got free shares once the value of the portfolio or that stock has come back up to where it was when I purchased it before it had split. Now, what's the next thing I can tell you? Don't spend money on stock that you don't have to piss away right now. And by that I mean don't borrow money from family. Don't borrow money from your savings account. Don't borrow money from your retirement account because you know a sure thing. And for God's sake, don't go and get a cash advance off of your credit card because, again, you know the stock to invest in and you have to do it today. That's the other thing. You don't have to buy any stock today. You can think about it, you can research it, you can look at it, you can buy it tomorrow, or if you're still hesitant, buy it the next day. Because if the stock is that volatile, you probably shouldn't be owning it. Now, the other thing I like to think is your stock portfolio isn't your mistress. So let's get out there and talk to people about it. And by that I mean, first off, you got a better half? Talk to her or him about what you've invested in and why you've invested in that company and sort of get them on board with it. First off, because this investment of yours has had some sort of effect on them and their bottom line because you've taken money out of the family fund, so to speak, to buy this stock. But more importantly, what you're looking for is you're looking to say, hey, honey, I just bought 100 shares of Pepsi Cola, or I just bought 100 shares of Apple. And now you've put that idea in that person's head, and they're out traveling around. And what you're looking for is for them to be listening to people or reading things or watching the news and hear that X stock has a problem, or X company is about to do this or be acquired or something like that. Because then they're going to come back to you and say, hey, do you still own that stock? And you say, yeah, and then there's the information that you were looking for that you didn't get. So by telling people what you own, and I'm not necessarily saying you need to brag about like, hey, I got 1,000 shares of GE or something, but put out there that, hey, you know, we're invested in General Electric, so, you know, keep your ears out. The other thing is, you know, again, the same sort of idea follows through with friends and coworkers. Again, I'm not saying turn around and brag about how much you've got. I think that's in bad taste. But saying to your, you know, to your friends and family, you know, what are you in? Or, you know, let me tell you about, you know, some of my positions. Again, it's an opportunity for them to come back and say, Jesus Christ, don't do that. I just heard that the CEO was, you know, this, that, and the other thing. And I would think that, you know, after the grand jury, blah, 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 the, you know, the stock's going to tank. That's what you're looking for. What else can I tell you? You know, another thought or idea is stockbrokers, and if you deal with a stockbroker, I don't. I've talked to a couple in the past, and I don't really feel like I get much mileage out of it. But if you deal with a stockbroker, keep in mind that those people aren't wizards or gods. You know, they put their shoes on one foot at a time just like you do. So if you are going to let somebody else manage your portfolio on your behalf, at least show enough of an interest to sort of keep them in check and reel them in time to time. And finally, the last thing I want to talk to you about is sort of a two-prong fork, is know what you own and own what you know. So let's talk about the first one. Know what you own. I can't believe how many times I talk to friends and family about the stock market and ask them, what are you investing in? And you know what the answer is? I don't know. I think the guy put me in some tech stuff or something. Boy, I think that's a formula for failure, because if you don't know what you own, you probably shouldn't be owning it. And that's not to say that, you know, you need to be well, fully versed in the idea, although I would be. But again, what you're looking for are those clues in society that a company is either doing really well or not doing that well. And unless you know that, like, hey, I own General Electric and Apple and Raytheon and John Deere, you're not going to know as you're walking around out there in the world that, like, I'm curious about that. Let me talk to my broker, or let me get on the internet and research that and find out how that's affected my my portfolio. The other idea is own what you know. And by that I mean there was a point in my past where I worked as a computer network engineer. And so every day I'm being exposed to all the terminology and all the latest technology. And I had vendors coming in and pitching this and that, and people cold calling in the trade magazines, and the talk over by the water heater is all computers every day. Computers, 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 computers. Well, because of that, I was pretty well positioned to determine what companies would or would not have been worthwhile investing in. The funny thing is, I didn't really invest at that time, and that's another story. But I suggest if you are in an industry, that's the first place to look to for the low hanging fruit. So, as I said, own what you know. Uh, Other than that, if you have any questions or comments, feel free to leave them down below. And as I said, please subscribe to my channel. I look forward to hearing from you, and wish you the best of luck with your investments going forward. Shelka04 out. Thanks.